Welcome to Retail Retold, the stories behind how that store landed in your neighborhood. I'm Chris Ressa, in conversation with the people and stories shaping retail and real estate. Brought to you by DLC. Welcome to Retail Retold, everyone. I am excited today. We have two guests. Today I'm joined by Laura Barr and Scott Schnukel from CBRE. Laura is the head of Retail Leasing for all of CBRE Americas. Scott is the managing director and occupier lead for the Retail Leasing for the Americas. Welcome to the show, Scott and Laura.
Great to be
Thanks
here.
for having us.
Awesome. So for those who don't know, why don't you both tell a little bit about who you are and what you both do, a little bit about your background. We'll start with you, Laura.
I background in urban planning only by education, and I was a broker for most of my career until a little over 2 years ago, where I shifted gears out of the wonderful team that I had built, and am now, as you mentioned, leading our retail leasing business on the other side, and could not be having more fun. And it got much better when we had a couple folks join us, including Scott, about a year ago. And
And
go
when
ahead.
you say retail leasing business, is that both project leasing for landlords as well as tenant representation, or is it just one or the other?
The whole thing, and they're
Okay.
very interconnected, as you know.
All right. Got it. Scott.
Hi, I'm Scott Schnukel, born and raised in southeastern Wisconsin, currently live in the Milwaukee area, wife and 3 kids. Grew up on the retailer side of the business, started as an intern at Kohl's department stores a little over 2 decades ago, and had a really fun long run there, and was fortunate enough to join the team with Laura about a year ago.
Awesome. Well, excited to have you both here. What I'd like to start with is a little bit, we talked about your titles, but titles can be misleading or unknown to others. For everyone who doesn't know, can you explain a little bit more what, call it the macro goals for your respective roles are, and a little bit more of like the day-to-day of what you all do?
Sounds great. So one of the reasons I was so excited to, once I did my proper diligence to take this role, was because I think that the opportunity to up level and transform the way that the real estate service industry specific to retail shows up is immense. So this was not a, hey, let's operate this, but Scott and I are working on a transformation plan. Um, and that can mean a lot of different things, but might help if I just talk about the major buckets that I'm most focused on today.
Go for it.
Number one is talent, by far. I think that we've got some exceptional talent, and we also know that we have a lot of gaps, and we are going to be meaningfully up leveling the quality of talent that we have in a number of markets. And there may be markets where, there's a gap that we don't think is going to be served by existing broker talent. And in many cases, that means potentially exploring clients jumping over. And we've got some of those conversations going. We have some of those that have already hit, which is great. So talent. And we can nerd out on the talent cliff stats, which are crazy. Investor leasing. We are publicly out in the market now for a leader for the kind of a counterpart to Scott, to lead the investor side of the business. The 3 of us will all work very closely together. We can go into that. And then data, tech, and tools. A lot of investment, both at the retail level and then the broader CBRE level, that has anticipated the retail component, which will be a lot of fun.
Awesome. We can dig into a bunch of that. And then Scott, what's day-to-day looking like for you?
Yeah, day to day, helping drive and support our teams to deliver incredible outcomes for our retailer partners. That really breaks down into 2 separate areas. One is augmenting our execution for retailers. So that ranges from what investments we're making in the platform and in data analytics to make sure that we're building the things behind the scenes that can really help us execute at a really high level for retailers. And it's also, since I'm still pretty new here, it's spending a lot of time with our teams and with our retailer partners. That's also, beyond just settling in and getting to know everyone and getting to know what's important to them and what helps them drive their business. But it's also how I get to the real meat of how I can help solve real problems for them and frustrations. And those things together can help us build a really great platform.
Got
It
it.
was funny. So I joke every time I hear you, like in the last few months, say that you're still new because it's been a year. When I think about the fact that you're one of the few lifers, like you were at Kohl's for so long that it is in relative terms new.
Yeah, that's right. Yeah, for me,
Not
it feels
relative.
very, very, very different for sure. Yeah.
Well, this will be your second Vegas with CBRE, right?
Yeah, yeah. I think I was
There you
like
go.
2 weeks in last year. So I mean, the weirdest part about that was actually not being in a new company. It was just being sitting in the same booth the entire time. So used to running around the whole time. So that was different.
So, Laura, when you say investor leasing, is that anyone who owns retail real estate, or is that a specific category? Like when I hear investor leasing, I'm thinking more of pension fund, private equity, that cohort, not necessarily like REIT or large private operator landlord, but I don't know what you mean by it.
I'm so glad you asked that question. No, it is not specific to one subcategory. It is the counterpart to the tenant side of the business in my mind. And we, will have areas that we are more or less focused on. Think about the areas of highest impact that we can have from a client perspective, but it's not exclusive to just the institutional set by any means.
Got it. And so you mentioned talent. I think, you know, uh, that's fantastic. Everyone wants to acquire talent. There's a high cost to acquire the best talent typically. Takes a lot to get them over. Um, does that show up in more than just hiring someone? Does that M&A, is that other avenues more than just the traditional for acquiring talent?
For now, it's just acquiring talent, and the conversations that we're having are the people that we've successfully brought over. I don't see that we will need to do any M&A, and the challenge for us is that, there's not really value in anything typically other than just the talent anyway. And so the idea of paying for something that's operating when we've already got a really meaningful platform, it doesn't make sense. And I think there will be markets where it will be harder and we may have to wait a little bit longer to show even more of the proof points of the folks that we're bringing over who are generating materially more revenue with the platform here. Listen, it's not a fit for everyone. This isn't, we're being very careful, very selective about, we're having a lot of conversations, but very selective about the folks that we are actually bringing on. And I think that that will start to come through very, very clearly specifically over the next 12 months. And like with anything, we will make some mistakes, but we will fix those as quickly as possible. And I think that we've got both the growth side, and I think there's also an opportunity for us to really rationalize on the other side.
And you mentioned transformation, and there was this huge opportunity on the real estate services side, and that's what got you excited about the job. What's the opportunity that you see?
So I think there are a few, and I know that Scott can speak to a really big piece of this, but I mean, a few things. I think 5 or 10 years ago, it was really in vogue to talk about shifting from being transactional to truly advisory. And I've heard a lot of people speak to that, but there's not as much that's actually evolved. Like even as simply as showing up for, whether it's a single asset or a portfolio and really deeply understanding what at the lowest level either that asset manager is doing with what you're reporting to them and their data and everything else up the chain, or speaking directly to a principal, even just having that side of the business. Some of that comes from the talent that we'll bring on, and some of that comes from the approach, the systemization of reporting or other things that can make it much easier for teams, whether landlord or tenant side. So again, depending on who we're representing in the given case, to be thoughtful around the teams they're building. Perhaps they're not needing to resource as heavily because of some of the opportunities that we can bring in the teams that we put together.
I have a
Yeah,
lot of thoughts on that.
on the
Please, I want to
retailer
hear them all.
on the retailer side of it, I think, um, yeah, we're entering a new phase of what it means to really service retailers. You know, for a long, long time, to Laura's earlier point, like it was uh, execution veiled as something bigger than execution, and there's just so much more meaningful data, uh, ways to interpret that data, information about the consumer that retailers are going to need to depend on in a new way, and we'll be expecting someone like us to come in and actually speak to it. So it's for to kind of answer the transformational side of it a little bit more, a little bit more pointed way. It's elevating the offering to be more strategic than transactional, and that means offering different services, a different product, a different platform that's differentiated, but can do that really highly effectively.
Got it. Very cool. Yeah, Laura, I think so. As a principal, landlord, owner operator, and we have a sizable portfolio. It's we're in the just north of $4 billion of AUM. Eh, eh, Everyone talks about like data and efficiency and super important. When I'm thinking of service, where I'm focused, because there's in so many different service providers coming at us from so many different angles that I I could spend my entire day going through that. And what I think about it, if everyone's focused on efficiency, it's not that we're not, we are for sure,
Mhm.
is who can provide actually not just a better way to do it, but a better outcome. And I'm very focused on personally aligning with providers who I'm pretty certain can do it better than us and provide a better outcome. And I think pretty highly of us. And so there, but there are obviously, every organization has gaps, right? And I think a lot of industries have solved for these gaps a l- in a solve for these gaps much sooner than real estate. Right? You just look at like accounting, right? The big four accounting firms have come in to all these major companies because they're experts and they're better, and come and audit and do all the accounting for people, and you outsource that service. You don't do that internally, right? That's an industry that was built on that concept of they're going to provide a better, not just a more efficient, but a better outcome than you can probably do it yourself. And so that's an example I would give, an extreme example, I think, because there's a lot of regulatory around that. But it's an extreme example, but I think makes my point is like, the big four is probably going to provide a better outcome than even some of the largest companies in the world who have all these resources could do themselves. It's not just more efficient. They're going to provide a better outcome. So that's one of the things I think about, just to put in your ear, as I think about on my side of the table of how do I get a better outcome?
Totally. And the question you asked at the very beginning, a few minutes ago, around, our roles and all that, I could have also mentioned how we're measured, right? Obviously, our measurement is around growing the business. But when I think about, and our team thinks about our North Star, it's client outcome, period. Because I know that if we hit that out of the park, revenue will follow, no question. So one, I think that's really important. Two, it's funny. I think that I almost approached too broad an answer to your question a second ago. I think what Scott shared and his approach to how we're helping retailers we'll be real estate committee ready at all times. On the investor side, I leaned in harder on the retailer side, the first little bit. We obviously have Scott and we're building something great. On the investor side, have in addition to my leadership role across retail, I am interim now and just a few months in on the call it landlord leasing side of the business, investor leasing. And I am very much in listening mode to our brokers, our clients, and I've had a lot of really compelling conversations about major pain points and what's going on. And there's some pretty interesting themes coming through. I think my hope is we'll get to come back and talk through a little bit more of that when we're in a position to do that, and that'll be a lot of fun.
Cool.
Um,
Very
but a
cool.
lot of great stuff there. Yeah.
So when you to pivot a little bit, that was really thank you for the little piece about what you guys do and your backstories. Let's move a little bit to the market. So if I were to say to you, what's most interesting to you about the market right now? You guys would say what? And we're talking retail real estate market.
Yeah. You want to hit that first?
Sure. Dramatically lower store openings and store closures to start 2026. Just looked at a report from CoreSite that said 48% fewer closures to start the year, which Chris, you and I had talked about before. That's, I think, a part of that is less bankruptcies than in previous years. I think we're at only 5 through Q1 versus it was 8 or 9, I think, in Q1 last year. But the openings is super interesting. 24% less openings to start the year. Could be a little bit delayed tariff impact. I don't know if we have a good answer on it yet as to why. But that's an interesting note in comparison to what I think everyone is saying around leasing, which is that leasing momentum is pretty solid by comparison and is kind of unstable. So, but it's interesting to watch. Interesting to watch from, does the store opening thing just kind of catch up? And it's just like an intermittent delay that's just kind of lost in them looking at it over a shorter duration. But certainly the less store closures that's gonna have an impact on space churn, right? There's just be less availability. What impact does that have down the line? And again, we got to watch for, is that just a timing thing? Will there be more that comes available just throughout the year that was I guess, comp on the previous year? So fascinating to see just a very large discrepancy in those numbers.
I have a take, so we'll come back. Laura, what's interesting to you in the market?
Well, I was going to even pile onto that because I think that there's a talent angle to what Scott's talking about. And I should say a talent angle, but also, of course, most boards are putting pressure on companies around hiring with AI, but I think that extends beyond. There's so much pressure on team building. And I think there's some other macro things going on that Scott alluded to or said, but there are, there are a lot smaller teams trying to do just as many deals. So of course it is going more slowly. And there's some other fun things around that. You think about 40% of today's commercial real estate workforce, which is, a little over 1 million, is going to reach retirement age in the next decade. That's versus 23% for all industries. And again, that's commercial real estate, not just retail. So for retail, if you look at it and say, okay, for a retail commercial real estate leader or for all sectors, the average tenure is a little under 20 years. But for retail, it's 27 and a quarter years of tenure. That's nuts. So you have these two issues where, one, teams are smaller. There's a lot less opportunity to be, hiring on a team, growing talent. We've got a bunch of people who are about to leave. So tell me how this gets better. Even when we do turn it back on and say, all right, we'll grow teams, or there's, more of an outsourcing component, depending. We talked about that earlier. I think that's going to be very interesting. So we're talking about this this quarter, this year, but what does that look like over the next 5 years? Well, I want to hear your hot take.
So my hot take on the store closures, I think, right, that the world is very occupied right now. And I talk to retailers every day, and I've never heard more retailers more strident about not giving up market share in my time, and refusal to give up market share and fighting for every piece of market share. Um, there was a retailer who I was speaking to who we were kicking the can down the road, and we finally have a deal to replace them. So I called them and said, "Hey, I know you weren't doing good here. Got to replace you." He goes, "I can't close the store." He goes, I'm not losing top line today." So, that said, historically for me, like, I think mass store closures are historically, to me, the biggest catalyst of vacancy, and not just those stores. So I don't mean when a large retailer is pruning the bottom 8% of their stores. I'm not putting that in mass store closures, right? Even if that is 800, I'm not putting that in. That doesn't have the same effect based on the data I've seen. When you see like Linens, Circuit, and all those go at once, mass store closures, and I think for a reason that most don't think about, and I think it's the second guessing. So I'll never forget, we had a deal ready to go, about to go on lease when Toys and Babies filed. And the retailer called me and said, "Hey, I'm going to get fired if I don't look at that space across the street. It's not that we're not going to do a deal in this market, but when I went to committee and I brought the options, that wasn't one. It's a good piece of real estate. I have to entertain what's going on there now." So obviously I chagrined at that. We had a bunch of stores, whatnot, but I understood the point that, and that's what mass store closures do. They pause, they make everyone reevaluate more than just those specific vacancies. The existing pipeline slows, not necessarily because deals will stop, because one of the things I talk about is in the retail apocalypse for 2008 to 2020, we leased a lot of space in America. And we did a lot of new stores open during that time. So it's not that stores won't open, but when those mass store closures happen, there's a pause in pipelines that I think really puts an invisible pressure on vacancy. So without those mass store closures, which I would argue we had that in 2025, Scott, in the beginning of the year with Joanne, Big Lots, Rite Aid, Party City, At Home. At Home didn't close in a bunch, but they filed. And then you take on Liberation Day of the tariffs. I was like, and you talk to most landlords and they woke up in January 2026, and they would say it's a pretty good year, 2025. If that was 2009, it would have been an awful year. But there was so much pent up demand to backfill a lot of those that we didn't see it like we saw it in 2009. So you couple all that, what I said, no mass store closures plus market share, you're going to have less closures. The store openings, to me, that's a lagging indicator, right? As you know, you sign a lease, you could open 2 years from now, right? So the store openings are a lagging indicator. What I would say is lease volume went down last year, not because of demand, because of occupancy. And I think, I think a lot of it with occupancy, and therefore I think you see a dip in openings because there was less leases done because there's less space available. I do think that, coupled with the store closures, I think that's the story. Because I still see like the vying for sites, I still see a lot of we're not giving up market share. So long story short, that's kind of my take on that. As it relates to the talent piece, I'm with you, Laura. I've been on this. I kind of look at the retail real estate sector as like, how many ICSC members do we have coming in new a year? Because that's like retail real estate of like, if you're going to be in the business and make an impact, you're probably a member. And so I'm constantly looking at like, what is the growth of ICSC? Because it would be, for you to be someone in the space and not a member of ICSC, that would be unusual. And so how is that growth going from the younger generation? I'm encouraged by what ICSC is doing with the foundation and things like this, but it's definitely, we have a long way to catch up for what I would call the labor gap between 2008 and 2015 of that gap and people leaving and not entering was just so long and so many. I think it's a hard gap to fill, for sure. And I'm not sure. I don't have the answer to that one. I'm not as confident in that one as I feel I am on the store opening, store closures comment, but I know it's a challenge.
Yeah, Foundation is doing amazing work.
Yeah.
I have the honor of now being on the board of that, which has been a ton of fun. Only a few months in, but it's
How
also a
many new
personal.
people? How many new people are entering a year? Like, do you know? Do you have those stats? Like, how many people graduate college and join ICSC? Is that what do you know? I don't want to put you on the spot. We didn't ask you.
That's a good question. I actually don't think I would. I'm sure there's a way to get to that, but one of the things that the why it's maybe a little bit of a complicated answer is one of the things the foundation does is give give memberships to college students, and so they're all in it, and then there's more of a question of who stays, who transitions
see.
to becoming a full-time member. So, but that's a good number, a number I should know. Uh, but yeah, it's a big thing. You nailed it, I think, on just the retail Armageddon phase of this. It's just talent. It was just getting beat up so badly in the press for so long that it's tough for talent to get excited about coming in. But yeah, and it's a personal passion of mine. I teach at Marquette University in their real estate program there, and try to make it as retail focused as possible so we can keep feeding people into the industry.
I had a great time at that class. Hope you'll let me back
Laura guest
again.
spoke. Chris, are you going to come guest speak next year?
If you ask, I will.
Deal.
For me, the interesting thing right now is just the better setup that retail real estate has compared to the other asset classes. It feels right just from an investable standpoint. It's very hard to invest in multi. It's very hard to invest in industrial to make economics work. We have positive leverage. We have a lot of things that make investing in our space doable. I think that's good for everybody, for retailers, for landlords, for the service providers, right? That's money going into properties. That's money going into the space. That's more investment dollars, more opportunities. I like that piece of it right now. That's what's most interesting to me. I think that's probably one of the things that provides the biggest opportunity to service providers, to retailers, to us, and that isn't talked about in that way, which is, right, if you think about it, if you make the space investable and more capital flows in, usually good things happen. So that's what's interesting to me right now. So
Totally agree. Like, for how many years were the people who were really investing were investing against a major current of, you
right.
know, everyone saying, I mean, I'm not going to repeat it because we've all heard it 3,000 times, but I think that was an incredibly impressive thing for so many to do, to say, no, like, we know what's going to happen in this industry. It's pretty obvious. And look where we are now. I mean, I think that's one of the first conversations Scott and I ever had was, how is it that we went from, this unbelievable, like, we're over retailed for so many years to suddenly, like, there's no space, which, by the way, is, we hit on this earlier, but it's very much connected to this, I think, also the slowdown beyond the obvious that there's less space to lease. But hey, I'm going to hold on to my market share because it's super, super expensive for me to hit growth targets with new stores. There aren't a ton of them. I've got to hold on to what I've got because we can't flip backward.
Yeah, for sure. Yeah, I think when I think about it, I think we had like two major shifts, which was one, the addition of new uses to shopping centers, right? If you look at like new store opening numbers and stuff like that, oftentimes the guidance is from the publicly reported numbers and they extrapolate. Where a lot of that's missing is like all the service providers and things that aren't retail that end up in shopping centers. So I think that's a piece of it, right? So we changed the uses of shopping centers, right? So that's one huge piece of what happened that enabled the industry and the shopping centers to stay vibrant and grow. I think the other thing is like a lot of retailers came to the resolution that we can't make money in clicks without the bricks, and that switched the narrative. And that took a long time to get consensus behind. There were some early signs of that, but it took a long time to get consensus. And once those two things happened, I think you started to see, you know, a little bit more optimism in our space. And when that optimism came, then the fundamentals followed that optimism around the space. Um, so I think it's good for all, you know, especially comparative to those other spaces. I hope that lasts longer than it probably will. But at the moment where we feel as an industry set up pretty good compared to those.
I think the first, just tag onto that. I think the first one you mentioned is under talked about in general. Just you walk down shopping centers and you look at what's in there and just say, there are so many more buildings where I can't take a good out of there. There's nothing for me to actually buy, right? Fitness, entertainment, healthcare, all these things that there literally no products are being, no actual tangible products are being sold.
Yeah,
That was just transformed how shopping centers look and
I
what
think
occupies shopping centers.
the healthcare industry executed flawlessly. And like, I don't know, somewhere around like 2008, 2009, they said as an industry, anything that's not an overnight stay, we're getting out of the hospital. It's too costly to run. We need to get closer to the consumer and we need to get it out of the hospital. And now you woke up like 15 years later and there's an urgent care in every shopping center in America. Right. And so they
Yep.
executed as an industry like flawlessly. Especially like going through it, they got great real estate and they had to deal with waivers upon waivers upon waivers. I think it was like, as a sector, it was a pretty flawless execution. I have to give it to that sector. Um, so, yes, it is underplayed, Scott. It is under talked about how the changing uses made an impact. That's the best example I can give is the healthcare, right? Because there's an urgent care like in every shopping center in America today, right? And that's why I like whenever I hear like an industry say, I want to get closer to the consumer. After that healthcare instance, I'm like, all right, well, that's retail real estate. That's where they're going because that's the closest real estate to the consumer.
Right.
So what that was interesting. I'll use a different word. What's most concerning to you about the space today, about the industry?
Scott, do you want to start? You want me to start?
Um, I think I think the math for retailers is still going to continue to get harder and harder for operating spaces. Um, to your earlier points, Chris, like all the retailers are protecting top line right now. Um, they've come off a few years of stability, so they feel comfortable with that. But the reality still
They're
is that
guarding it
e-commerce,
hard. Armor,
yeah,
they're guarding it
yeah,
hard.
yeah. The reality is still that e-commerce continues to grow, that AI may continue to evolve and change how that grows and could potentially accelerate it. Um, so, re, do I have confidence that broadly retailers will continue to adapt their footprints and how they operate to make their retail spaces the appropriate mix of things to service the customers that they need to? Well, yeah. Do I think that that will that sort of need to continuously evolve and invest? Do I think that will potentially um, cause pressure on the retailers that aren't as healthy and that can't really invest and reinvest at the same pace? Yeah. So I think there's continued uh, risk with that evolution, and just retailers having to think through how to profitably operate spaces. Um, and as especially as rents continue to climb, operation costs continue to climb, and to get that's going against that potential impact from e-commerce sales.
I think the thing that I'm most interested in this whole category is how much is going to change and who will adapt and how. And very recently, I think one of the answers to that question for me would have been labor cost. And I don't mean like a few months ago, but talking about like, 3, 4 years ago. And what does that do? Where are the areas you can automate that labor away? Where can you not? Construction's harder, et cetera. You think about even like material costs and things, whether we're talking about construction materials or goods that are being sold, so much of that's in transportation cost. You look like if you're in San Francisco, you want to take a ride somewhere. Like this just did this with my husband the other night. Cool point. So what's interesting to me about this, my husband pulled up one rideshare provider, it was $78. Pulled up another rideshare provider with, you know, another rideshare provider, it was $13. Same ride, same like class of, a fanciness of ride. And that second option is one that is, angling to pull away the labor and is already seeming, my assumption is, from no inside information, is pricing at that level. Think about how dramatic that will be when we don't have the human component in so much of that transportation. This is a dated stat, but at one point it was something like, I don't know, this is 5 or 7 years ago, 7% of the of the male population in the US are truck drivers. That's nuts from both sides. What happens when that labor pool is not, think of all the retraining that's needed. That's also a consumer base that impacts retail. So there's so many spider webs of implications to our business around it. And it's going to be a crazy next 5 years, 10 years.
For sure. That uncontrollable, I'm doing the best that I can, but who knows, right? Like, it feels like AI, there's obviously super exciting benefits and super concerning risks, and every industry has their eyebrows raised and just doesn't know which way it's coming or going just yet. But super interesting story. For me, I think, I went at the New York ICSC, which was in December, and we're doing this in April now. One of the most exciting things I heard from retailers was, I was mentioning tariffs and other geopolitical things, and they were like, listen, we had this era where all our capital is going to digital infrastructure, 2008 to 2020. Then we had COVID, and we're not letting these existential things impact our strategy anymore. And now we have money to deploy into stores. And I think when capital is flowing into your sector, whatever it is, usually that has benefits for the sector, whether both from the landlord, the service providers, the retailers. And, what keeps me up tonight is when there's a pullback in that capital going into that sector. And because it usually means, right, money goes where it's treated best. It usually means that returns aren't there. It usually means that, there's better alternatives. And right now, it's a good place to put that capital. And so I'm excited about that, and hopefully that continues.
It's been a fun decade.
Yeah, for sure. All right. This has been fantastic. What haven't I asked you, or what haven't we talked about that you guys want to say? Or just should have asked you?
I have one for you, Chris. I didn't tell you I was going to say.
Go for it.
I think that your and my relationship is actually one of the more interesting and fun facts about how our industry operates.
Wow.
Because I was thinking about this the other day. I'm not sure you and I actually did a single transaction together during my time at my previous employer. We talked about
a waiver
a few.
or two.
Yeah. I think we talked about a bunch. I'm not sure we actually did any. And, just dawned on me like that we become closer over the years, and, to the point of, I don't remember how many months ago it was, but, we were texting back and forth, then got on talk for an hour on the phone about state of the industry and some things we were seeing. And I was just like, I just had a moment of reflection on like, what a awesome representation of the uniqueness of our industry. And that like, I don't think, I guess I don't know since I've been in it so long. Like, I don't think there are a lot of other industries like that where you can have a relationship with someone that you actually pretty much didn't do any real business with. That's really deep and meaningful and one you care about. So I thought,
agreed.
Yeah.
Cheers to that.
That's right.
I've had so much fun getting to know really good friends of Scott over the last couple of years. It's been one of the many benefits of getting to work with Scott.
Anything, Laura, I didn't ask or I didn't say or you wanted to share that, please feel free.
The one thing that keeps coming to mind for me is, this when we were talking about like how we're thinking about the business and approach that I don't know why I didn't hit on. And this connects to the AI conversation we're having a little bit. You think about the facts that you can clog code pretty much any kind of software, but for a frontier model or a near frontier model. And I'm sure someone in Silicon Valley is going to fact check me on that. Please do. So what does that do? We have a really, really thoughtful teammate who is partnering with really closely on all of our data tech and tool stuff. And he kind of pointed this out to me a while back. Think about software becoming more of a commodity. Well, then what is of value? It's the data. So I think about what we're really leaning into hard. And people talk about what's the advantage of scale? And there are some. But that is what I am most excited about. The access to data points that we have that we can pull together to then pull off those outcomes that Scott's talking about. We touch more transactions than anyone. So that's an exciting piece. I think it's going to be a crazy next few years thinking through that software versus data component when software becomes the commodity.
Totally agree. I'm scared to parse through all the data and find the actual actionable data. Because what I care about is the actionable data. There's a lot of great insights and cool data out there that I get. And I look at it, I'm like, that's interesting, but like, I can't do anything with it. And there's too much of that. So now that we're going to have access to so much more, I'm like so dreading parsing through of like, what is actually actionable here?
But that's the full circle, right? And that is what Scott and I are working on with our teams is how do we make sure we're telling the story with the data and then coming to you, not with here's the data or here's the insight. Here's the action we recommend. By the way, if you want the data to back that up, here you go.
Awesome. Well, listen, I'm excited for you two. Best of luck. I want to bring us to the final part of the show, which is the fun part. I got 3 questions for each of you. Are you ready?
Let's do it.
Ready.
Question 1, my favorite one. What extinct retailer do you wish would come back from the dead? Go ahead, either one. Laura, go.
Okay. I gotta say, as I thought about this one, American Apparel just kept coming back, I think that would be a lot of fun.
Got it. Scott?
Radio Shack for nostalgia purposes only. I just remember feeling like such a nerd in the best way when I walked in there and was trying to get some connector or thing for something to hook up a VCR or a DVD player. So that one sticks with me.
I had all my old sports tapes are on a VCR, like on a cassette, VHS. So I had to get a VCR, which I can tell you, I don't think it's possible to get a VCR to your house in less than a week. It is very hard. A new one, one that's new. I am not sure. I still don't know if I bought a used or a new one, but bought a VCR. Then, if you think that's hard to get your hands on, the connector to connect it to today's TVs, there's no wire. You need a connector to connect it to
Yep.
some other device. That connector, that also you can't get in a week to your house from any retailer. And so those were the things. That connector, I would have been able to walk in a Radio Shack and get like that, but it doesn't
Yep.
exist today. There's nowhere I could get that connector.
Oh yeah. That's so funny.
All right, question 2. What is the last item over $20 you bought in a physical store? Laura.
Okay, I think that this was an athleisure item that I bought last weekend, and kind of crazy, I'll make this short, but I decided to try out agentic AI because for some reason, while I definitely invest in clothing because I love clothing, I have been wearing the same 2 pairs of athleisure pants, we'll call them, for like 10 years. And so I was like, I need to up level all of this. And I used sort of an agentic tool to find me a brand that I wasn't familiar with, order me a couple sets, da 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 da. That was a lot of fun. Well, I decided to go to 2 name brands that I wanted to check out. And for months, I've been wanting to go and order online. And I keep filling my basket and then abandoning the basket. And I finally went to a shopping center not far from where I live. I do live in the city, but it's easy to get to Marin. And I went back and forth between these 2 brands and left spending a good amount on both. And then decided I wanted to come back, and instead of ordering the last piece online that I knew I wanted and left, I drove on back and picked it up because we're in retail.
Bring me back because you're going to bring me back because one of my answers at an OAC roundtable was this. So I'm going to come back to that in a second. Scott, last item over $20 that you bought in a store.
Tuxedo shoes.
Huh?
Going to my first like proper black tie event fundraiser over the weekend upcoming with some good friends from growing up. I've been to other black tie events, but they're like black tie adjacent, so I could always kind of like get away with something close. But this one, I've got to crush it. So I got the proper patent leather shoes.
Amazing.
Love it.
All right. Last question. Well, the last item over $20 that I bought in a store was sneakers. But what I was going to say is there was a little round table and we were talking and everyone was to go around the room and say, what concept from a physical store perspective is missing that should be a business? And my answer was a value athleisure chain. And because we have all these premium Lulu, Athleta, Alo, Yoga, Viore. It's great stuff. I'm literally wearing Viore pants right now. But it is, I don't know if I'm allowed to say that. So anyway, but they're premium. I am shocked there's no one opening stores to sell that offering since it's now structural in our society that is style of clothing that people are wearing that is dedicated to just serving that value consumer. Probably. We'll see. Last question. Laura, if you and I were shopping at Target and I lost you, what aisle would I find you in? Okay. Awesome. Scott, how about you?
Definitely not hair care. Uh, pro- probably in the tech area. I always find a way to walk over there for some reason. Almost just the allure of the 20 TVs in the wall or something. But I'm always over there at some point, depending on the time of year. Maybe more if it's more around the holidays. I definitely always find my way back to the holiday section in November and December and look around, and January to buy clearance.
Got it.
Yep.
Awesome. I hear you. I hear you. The toy section at Target and Walmart is now enormous after toys and babies, exited. So
Yeah. Yeah.
like you can get like a full toy experience at those two stores. And like, there's not many toys, unfortunately, my to my chagrin, there's not many toys they don't have. So you could end up in those aisles for days there. Yeah, it's brutal. Brutal. So anyway, uh really appreciate you guys coming on. This was great. Thank you so much. And continue rocking. I'm excited to see what you guys end up doing.
Yeah, great to be with you, Chris. Thank you so much.
Appreciate you watching. Hit subscribe. See you in the next one.